We are back here today on my channel, Survive and Thrive. And I want to talk about a company that I've covered a few times since its IPO. And that is an e-commerce company, also known as the Amazon of South Korea. That company is Coupang, ticker symbol CPNG. Now there's been a number of Seeking Alpha articles that I've been reading into, and I wanted to cover a few today to help guide you to see if this is a company that you should try and buy into, or if we think that the per share price is still a bit too high. Starting off with a more bullish view, this e-commerce stock is a strong buy. In summary, Coupang grew its top line at more than 50% last year. While Coupang is not yet profitable, it is expected that the e-commerce firm will deliver positive EPS in fiscal year 2024. Shares are attractively priced after a 61% decline in pricing over the last year. So that all seems like promising news and something that would interest investors with such a sharp decline, but you have to look at where they're at with revenue and earnings. E-commerce businesses promise investors long-term potential for growth, and so does South Korea's version of America's Amazon. Coupang is rapidly expanding its home market in South Korea, growing its market share and improving customer monetization. Shares of Coupang went through a large and undeserved 61% drop in pricing, and this particular author believes the drop creates a buying opportunity. Now, to explain Coupang's large price decline, Coupang benefited from the shift to e-commerce during the pandemic, which served as an accelerant to their firm's growth. With this no longer being as big of a threat to the economy as it was back in 2020 and 2021, valuations for e-commerce firms have dropped, and in the case of Coupang, too much. Growing addressable market in South Korea. What many investors may not know is that the South Korean e-commerce market is large and rapidly expanding, creating a long-term opportunity for Coupang to increase its market share and add a significant amount of dollars to its top line. The total South Korean e-commerce market was valued at nearly $200 billion in fiscal year 2021 and is expected to grow by almost half to $291 billion by 2025. The South Korean e-commerce market is also expected to achieve above average annual growth rates over the next 4 years. The South Korean e-commerce sector is projected to grow 11% annually from 2021 to 2025, which is set to make it the second fastest growing e-commerce market in the world after China and before the US. So that is a very significant statistic and something that you could look at as a very long-term play for this company, because honestly, the price per share at this time is pretty cheap. Market share growth and improving customer monetization. Coupang has become a significant force in the South Korean e-commerce industry and has the largest market share according to Nielsen. Based on 2020 year information, Nielsen's data also proved that Coupang delivered the largest market share increase in the South Korean market that year. Coupang's market share in fiscal year 2020 was 24.6%. Now, jumping down to the potential for massive revenue growth, Coupang achieved net revenues of $18.4 billion in 2021, showing a top-line growth rate of 54% year over year. Although Coupang is growing e-commerce sales much faster than Amazon, Amazon grew net sales, including net service sales, at 22% year over year in 2021. The South Korean rival is still unprofitable. Now, part of that has to do with Coupang also starting to diversify and build out their business by branching out. And so I think that it will be a number of years before they actually do become profitable. And for anybody making a long-term play, you've got to be okay with that as long as you believe in the strength of this company and where they're headed. Coupang's net losses, on the other hand, more than tripled to $1.5 billion in 2021 because the firm is investing heavily into its growing businesses. Going forward, this author expects Coupang's investments in its various services, especially Rocket WOW, to pay big dividends. Coupang, based on consensus EPS predictions, is expected to show its first profits in 2024. So the Rocket WOW growth opportunity This is a subscription service with 9 million paying subscribers at the end of 2021, which is about half of the firm's 18 million active accounts. The subscription service is similar to Amazon's Prime and allows free shipping of e-commerce products ordered on Coupang, and has other benefits such as travel discounts and free video streaming on Coupang Play. Coupang has huge potential to grow its active account member as well as rocket wow uptake going forward. He believes the e-commerce company could have 15 million rocket wow subscribers by 2025 and more than 35 million active accounts by that same year. Now, as I stated, Coupang's growth is still cheap. They are expected to continue to ramp up revenues quickly in the coming years. Based off of Seeking Alpha provided estimates, Coupang is expected to see $23.1 billion in revenues in 2022 and grow its top line to $39.4 billion in 2025. Based off of $28.6 billion in expected revenues in fiscal year 2023, shares of Coupang of a PS ratio of 1.1x, which makes Coupang's growth significantly cheaper than Amazon's, despite the firm growing much faster. Now, there are some risks, and I want to cover a couple of bearish articles and viewpoints also out of Seeking Alpha, so we'll jump into those next. So this particular article, Coupang stock 2 reasons we're still not investing despite the price decrease. In summary, shares of Coupang are trading considerably below its IPO price, which they were around, I want to say, the $40 to $47 range when they closed the day of IPO, but they still believe that this is not cheap. While Coupang is still growing revenue at a decent pace, the main problem seems to be the operating leverage that would be needed to reach profitability soon. Decelerating growth is another concern of theirs when considering the current valuation of CPNG stock. Now, it's a company that they have been following since its IPO, just as I have. You can see the previous videos that I've done. I will put a suggestion link here so you can go and check those out. But as they have, I have done the same, and neither one has invested in this company in particular. At first glance, it does look attractive, with massive e-commerce market share in Korea and very fast revenue growth. Unfortunately, it does not appear to have a particularly strong competitive moat to defend itself from the intense competition in the markets it operates in. This lack of competitive moat is reflected in the financials, where it is clear the company has squeezed margins and is having difficulty achieving operating leverage. Coupang has stated that Korea is the 3rd largest e-commerce opportunity globally, only behind China and the US, and one of the fastest growing with an estimated CAGR of 11%. One problem that they can identify is that about half of the total Korean online shoppers are already active Coupang customers, so it is going to become increasingly difficult to grow the number of active customers for the company. Much of the growth will have to come from getting existing customers to spend more. Now, looking at website metrics, by looking at visits to their website, we can see that there has been some reduction in the last few months. This might be a precursor to further disappointing growth numbers in the next quarter. Notice how the Coupang.com website went from being the 318th most popular website in the world 90 days ago to 327 today, which shows the site popularity is going in the wrong direction. Similarly, looking at other engagement metrics such as page views per visitor, time on site, and bounce rate, they all have experienced deterioration in the past month and a half. So in conclusion for this particular article, the biggest problem that they see with Coupang is the lack of operating leverage and a clear path to profitability at the moment. In addition, there is the issue of decelerating revenue growth, which further complicates things. For all these reasons, they think that Coupang is not cheap enough to warrant an investment, and they would like to see clear signals that there is a path to profitability before investing. And I'll cover another bearish article here next so that you can get further details about what you potentially should do if you're thinking about jumping in to invest now. This particular article, they focus on the problem really lying with SoftBank. In summary, Coupang reported an underwhelming fourth quarter of 2021. However, it communicated that Q1 had been looking constructive. However, they think SoftBank's huge stake in Coupang could continue to impact CPNG stock's momentum. They discuss why SoftBank could remain Coupang's biggest risk in the near term. And it looks like I wasn't able to continue with that particular Seeking Alpha article because I've reached my limit for this week with my free membership. But jumping over to another SoftBank Coupang article. As of March 14th, SoftBank sold shares worth $1 billion in South Korea e-commerce firm Coupang, a filing showed amid a slump in the value of the tech investment firm's holdings. Now, this isn't the first time, and so that's why I think that some investors are really concerned that SoftBank could continue to sway the per share price by these major sell-offs. And so that's what can spook some, which would make a bigger sell-off happen and reduce investor confidence in the company. Vision Fund sold 50 million Coupang shares for $20.87 each, and that's according to a filing to the U.S. Securities and Exchange Commission dated Friday as of last month, leaving the investor with 461.2 million shares remaining. SoftBank sold Coupang shares worth $1.69 billion for $29.69 each in September. The conglomerate first invested in Coupang in 2015 before the launch of Vision Fund, which holds the stake. They're going to sell the winners, said RedX research analyst Kirk Boudry, which estimates SoftBank's invested in Coupang at an average of $4.80 per share. Selling at a loss isn't going to be very well accepted in this market. The South Korean firm's shares are trading below their listing price as investors turn skeptical on the money-losing startups that litter SoftBank's portfolios, which has also been hit by a collapse in China tech valuations. And so based on that, SoftBank has been trimming stakes in listed companies as it prioritizes investing through the second Vision Fund and share repurchases in a $9 billion program. SoftBank shares have fallen by almost a fifth year to date. So they do have a significant sway or influence on Coupang. And so it could be something that continues to cause dismay and distrust in wanting to invest in Coupang. But I do think that if we look at the historical chart for the per share price and where they have come from the IPO close, that there may be an opportunity to get in while it's still cheap. You can see here in the past 5 days alone, they're down another 6%. And if we go over to 6 months, 38%, being as high as $30. And you can see that they're currently under $17. And if I just pull it out to March of 2021 when they IPO'd, you can see that they've had a steady decline over time. And it's been a very rough ride for anybody who bought in at the IPO date or shortly thereafter. And this is a significant slide at 65%. So like I said, if you're looking at this in terms of a long-term investment, I would say in the next 3 to 5 years at a minimum, then this may be a time for you to buy in, but I would nibble until we see further earnings reports to see if there is more downturn that will allow you to buy it at a lower cost. And if it does, if it's a company that you believe in as a strong e-commerce company that could continue to grow and find profitability in the foreseeable future, then definitely increase your position, build more on the number of shares that you have, and buy in when it's cheap. But like I said, I think at this time, based on my own research, from what I'm seeing, there are too many red flags currently, and I still am not convinced of their path to be able to make strong revenue and put them in a spot where they're making more money than they're spending. So for anybody else who has invested in this company or is thinking about investing in Coupang, please leave comments below. Let's share our thoughts with fellow YouTube members and investors. And if you've gotten value out of this video, make sure to hit the like button and subscribe. I'm almost to 200 subscribers now, trying to get to 1,000 this year, but I need each and every one of you to help with that. So until next time, keep looking for those opportunities to build your path to financial freedom, and don't just survive, thrive!